Normally this comes after the month following a quarter end. However, some of the fact sheets were in, so we went ahead and made the large book for you today. For you have quarter end, March 31st, 2013. As you can see, total account value as of that date was $43,409,775. Add in just over $50,000 in accrued income, puts you at $43,466,62. Total drop balance as of this writing, $19,977,311. March was another strong month for the domestic equities. As you can see, total portfolio for the month of March was up 1.73%, so just shy of 1.75%. Inside the indexes, you see the Wilshire 5000, again continuing that momentum that we saw the previous 2 months of the first quarter, up 386, S&P 500 up 412. You saw the Dow, which is going to be your Dow 30, up 373. And then the international, the only negative on the sheet from your underlying indexes, down 194. Still have some of the issues that have been ongoing for the last 2 years, and more than likely will continue to hear about as we progress through their cycle. NASDAQ had a really good month for the March, up 340. And then the 1 to 3 year credit, as of March, again, not a whole lot of movement in Treasury prices to the right side of the trade. 9 basis points, but again, some of that has reversed, and we'll talk about in a minute. So 173 versus a 138 blended return. What that did for the account for the quarter, up 5%, 5.04% closing out the year. Alex and Larry and I wish we could go ahead and annualize that number. But certainly don't anticipate that, which is probably a good segue into kind of what's taking place in the market now. Before I do that, though, let's go ahead and look at that middle column. 504, again, just a tremendous first quarter. Certainly feel good with that coming off the heels that we did year in 2012. Blended returns comparison was 414. But look at some of the index numbers in your second set of column row of numbers in the middle there. Wilshire 5000 up 1091, S&P 500 1073, and Dow Jones 11.25. And again, you see international still negative. So really a domestic-driven rally. You had a lot of money coming. It flows from other places into the U.S. equity market. You had a lot of money coming out of cash. You had some coming out of bonds, kind of unwinding some trades to go to equities. But really a lot of cash that had been sitting on the sideline finally decided the government's putting in $85 billion a month in fixed income. I'd rather take the risk now into the equity market. So you saw a lot of people who really missed out in 2012 returns take that money off the sidelines and deploy that capital into the equity markets. Annualized since inception number as of March 31st, 708%. Great number, we're certainly proud of that. Blended return at a 544. What's taken place since March 31st has really kind of been a culmination of a few events. Yesterday marked the 3rd day in a row that we had a triple-digit move. Of course, earlier in the week we had the, I believe they're deeming a terrorist event, which they should, in Boston for the bombing. That really sent the markets off 2%. Then we had a bit of a recovery trade on Tuesday, getting half that back, and then yesterday kind of giving back that other half, down another 100. So we are seeing some volatility out into the marketplace. Certainly things that are going to be on the investor's mind are more bombings. If there's bombings, when if it starts bombing retail centers where people go out and feel comfortable spending money into the economy. So those are things that usually trigger some type of nervousness. Probably the biggest event that we have going on, well, we've had some earnings come out. Goldman Sachs knocked the cover off the ball. They really blew out earnings, had a great, they made $2.2 billion for the quarter. Solid numbers, exceeded expectations. Bank of America came out with earnings yesterday, fell short of expectations, in part led to some of the sell-off yesterday. Next week we have about 170 of the S&P 500 companies reporting earnings, and I think that's going to be the tale that kind of dictates going forward. I mean, at the close of Friday, the S&P 500 was up 12% for the year. If you think about that for a moment, I mean, that's a heck of a run. No one thinks that it's going to annualize that number and keep going. We do think we're going to end the year higher, but how are we going to get there? Are we going to get there on a straight line, or are we going to have some volatility? And right now you are seeing a lot of option buying to go out, whether it's in forms of protection or for just having the right to purchase securities at a higher price later. So You are seeing that volatility spike a little bit. Some of that again due to the event that occurred in Boston. Others that is still that we're at record highs, all-time high on the S&P, on the Dow Jones, and we still have very high unemployment. So a lot of the numbers that have been kind of baked in the cake, so to speak, some of the returns for the year, that could be justified or falsely accused, rather, going into next week, depending on some of the earnings for these companies. So next week's going to be a nice week for us. We did take some money off the table. After last month, we took from 44% and change equity exposure that we were at the end of February down to 41%. We just felt like anytime you've had that kind of first quarter, we expect a little bit of pullback. And really the last several Mays have been negative Mays. And that old adage, sell in May, walk away, has certainly held true the last couple of Mays. So we're just being a little preemptive in trying to rebalance. Anytime you've had a nice run, it's healthy to take a little bit off the table, rebalance, never do the wrong thing by booking profits. Let's go ahead and flip over to the pie chart, and you'll see exactly what I just spoke of. The second to last number on the page, the equity allocation, just under 42%. So it took a few percent off the table. Still have cash position at a 643. You see the fixed income. Separate account 2.25 plus the almost 30% in the ETFs, and then your equity position 41.96. In your other, your real estate, your mezz, and your Goldman at 19.64. Real estate had a good quarter, continuing to even see real estate do well and hang in there even at these last few days of volatility on the REIT side. Many managers that we're speaking to that we have money with, such as Prissa, and other ones that we don't, we just listen to, kind of seeing what's taking place out into the commercial real estate environment, multifamily environment, and you're continuing to see positive signs in that while you're not really seeing it in the U.S. housing market. Mezzanine finance, they just completed their audit. We've got that. They should have their quarterly performance review. It should have been here. I was hoping to get it yesterday. It hasn't got in yet, so we'll have that for you at the next meeting to discuss. And then Goldman's hanging in there on the commodities, but commodities have had a very difficult 2 weeks. You had gold sell off almost 10% in one day earlier in the week. You have copper down at recessionary prices, and you've had oil go from about $100 a barrel down to $87 a barrel. So very difficult in the commodities. It'll be interesting to see how they post their number. Being a long-short fund, we certainly don't anticipate dragging like the market has, but commodities in general, long-only commodities, have had a very difficult time. So I believe the Goldman was up about 1% prior to that, so it should be interesting to see where they fall in place. Should have that, I would expect. They usually come out about the 19th of the month, so probably by tomorrow. We'll definitely have it for you in your next meeting. Behind tab 1 is your manager lineup. And Alex has a few comments for you going over the managers.
Yeah, we won't pick this apart. Obviously, very good numbers through the quarter. You can see at the top block up there for their fixed income managers. We did replace JP Morgan core bonds, so you do not see that any longer under your manager review. We took them out of place, and actually it worked out real well and reallocated those funds. But from BlackRock through PIMCO, you can see very small gains year to date through the first quarter. Now a little bit of that has changed. We've seen interest rates come back down on the 10-year. We've seen a little bit of a flight to quality obviously over the last couple of weeks since April 1st. So some of these numbers have in some cases even doubled from their year-to-date gains, which has really helped us over this, what is the day, 18th, over 17 trading days to kind of smooth out our performance. And I'll give you an up-to-date performance as of last night's close. Real estate going on down, we're at 3.29% for the first quarter. That is your report for the quarter, although the valuation has not been changed in your report. So in other words, the increase in valuation for Prissa won't go into effect until this next month's report. We got the, we don't have the asset balance, we just got the performance report. Good quarter, talk about that in a little bit. From large cap blend all the way down to international, you can see these numbers year to date on your page, starting with 9.58 down to Vanguard Emerging Markets, which is our worst performer. China has been a little bit of a I shouldn't call it a cesspool, but let's just say that it's cesspool. We'll leave it with cesspool. Some of these numbers have changed obviously since March 31st. A couple things that have jumped out though. Vanguard REIT down there in the sector oil and gas up 8.06 is now up 11.5%. So it's counter to what the equity market's been doing. Vanguard Emerging Markets, on the other hand, which was down 3.58, is now down 6%. Emerging markets has been extremely tough. China came out with their GDP, I guess, first of the week. It was 7.7%. Sounds great compared to our GDP, but they've almost got to have 10% to fully employ their workers. So they're very, very much in a slow phase right now for China's economy, which has ripple effects all the way back to continental Europe and to some degree has ripple effects back domestically here in the U.S. I will tell you, other than the iShares Russell 2000, most of these indexes have held in the last 2 weeks. The Russell 2000 value, though, is only up 6.34% versus 11.58 respectively at the end of March. And that's been basically due to financial selling off in that small cap range as well as consumer discretionary. So if there's been a real pullback in one asset class sector, that's where we've seen the most effect. We did add one new manager, Goldman Sachs Rising Dividend Growth. We bought that on March the 20th, settled on the 25th, and we're really right where we were at that point in time. That's held up real well, and that's one of the reasons why we chose that to reallocate. As Bo said, we were roughly 44% and above in equities at the end of March, or before the end of the March time period after our meeting, and we took that down 3%. That helped us a lot with this current sell-off. As of last night, we were up 4.48%, so we've given up, what is that, about 56 basis points, when the S&P's been off 2%. So, pleased with that. I don't know if that'll continue and hold up, but I'm pleased at this point in time. Our reallocation was timely. We felt like the market was a little bit ahead of itself, and obviously over the last 4 years, we've seen the second quarter be somewhat unpleasant. So that's one of the reasons why we took a little money off the table. Any questions about the managers? Don't have any real issues right now with any of our managers. I did update through last night, and while they have pulled back some, they've held up real well. We do have approximately 4 3/4% in cash right now. We're a little cash heavy. That's been fine too, because we didn't reallocate that money when we took the money off the table. Deb, I don't know if we have any demand on the drop. We got any withdrawals coming out?
No, we've done everything for this month, and I haven't received any more requests yet.
We'll probably keep that in cash for the time being and see if the volatility slows down, but we've definitely kind of re-entered that phase of volatility since the end of March. Let's go to tab number, I always got to look, tab number 2, behind tab number 2. This is PRISA report. This is their flash report. Up 3.29%, income made up 1.29%, appreciation 2% for your total for the quarter. Extremely good quarter. A little bit better than what they anticipated. They were looking somewhere in the range of 2%. Really, Parkman phase has been driving PRISA as well as storage again. No real surprise there. Performance, about 40% of it is due to the apartment sector. Some of that due to the luxury apartment project that they have in Chicago, the SoNo East 324 unit that was constructed. They've had a lot of success there. And then the self-storage with new investors coming in has been good. I will tell you that they are benefiting from California, which is actually not a bad sign from an economic standpoint. It's been a while since we've seen California show some signs of positive activity, but that has been very strong from their sector allocation. They have acquired 5 new investments, and they've also sold 5 investments. So if you look at it from that standpoint, they're taking some profits and they're making new investments, so they still see this continuing in the real estate area. And I think if you were to talk to them, they've shown up here on this flash report their 2013 projection for approximate rate of return this year with appreciation income anywhere from 8 to 10%. I think they might now raise that a little bit based on how the quarter ended up. So we might be looking at maybe above 10 to 11%. So the real estate portion has been very good, both in the REIT sector as well as on PRISA's standpoint, which is a positive sign for the U.S. economy. I will say business leasing, business office leasing, and commercial leasing is still dragging a little bit, but it's showing some positive signs. So we still feel good about this. We'll have probably a further update from Kevin when we talk to him, probably first of next month.
Any questions? All right, thank you.
Thank you, Rich. Appreciate it. Thank y'all.
Next item is approval of the March minutes.
Mr. Chairman, I believe minutes. They were uncommonly excellent, I thought, this month. So I was glad I'll make a motion to approve.
I'll second.
There's a motion and a second to approve the March minutes.
There's one minor typo on page 2 and 4, but it's,
I thought the rest of them were so excellent that I overlooked that minor typo, but we can make word
it's on line, yeah, pass.
Seal.
That's it.
Okay, all those in favor, signify by aye.
Aye.
Is that mine?
Opposed, motion carries. Kim?
This is the report on Miss Anderson.
Mm-hmm.
I called the nursing home and confirmed that they do not have any power of attorney or anything on file with her, give them the authority to receive or make any changes to her account. In fact, in our discussion, she thought that they had the, I guess it's called, some conservatorship over her Social Security, but looking at that, they don't even have that. So I followed up with talking to the granddaughter again. She said, yeah, she's working on guardianship and she's waiting on consent from her father or something like that. And she referred me over to the attorney, so I called him and finally talked to him, and he agreed that they have been working on getting their guardianship done, but they didn't have the attorney's fees and they didn't have some of the consents that they needed. So I explained that, you know, if they could get that in place, then, you know, we had some funds that could be released, and so he said he was working on it. I checked yesterday, and they were still waiting on a letter from the doctor stating that she needs a guardian, and that's the last thing they need before they can file their guardianship with the court and get the granddaughter appointed. So at this point, you know, there's no one in place to make any changes as far as making the payments go directly to the nursing home. So I don't think we can do that. If you want to just go ahead and reassume her direct deposit, you could do that, and then, you know, her money will start going back into her account, because the granddaughter is on that, and you wouldn't need anything for her to be able to then access the funds through her bank account.
So you're saying, go ahead and release the funds in the direct deposit, and her granddaughter's a co-signer on that account?
Yeah, her granddaughter's on that, from what I understand, I didn't confirm that, from what I understood, her granddaughter is on that account with her.
Is there a direct deposit, or does she get a paper check?
They have a direct deposit. Now, what we have is, for that period of time that we didn't have the affidavit that she had not remarried, Kathy converted those over from direct deposit to paper checks. So we have, I think, 3 paper checks that are there. That's sort of what we were trying to determine what to do. And Kathy said that she has, in the past, been able to convert those back and make them direct deposit. So that's, if you want to just, you know, put an end to the hold on it, that's what I would say. Just have Kathy cancel those paper checks and just make it all direct deposits, because we do already don't have on file authority to do the deposits into our account.
There's really not another option, is it?
Not for us. I'm gonna imagine it's gonna take at least, I mean, when they file the guardianship, you know, she's gonna have 20 days to answer, and I would imagine you're probably another, you know, at least a month away, even if they filed it today. And, but I'm not seeing that they're really moving very fast on it. So for our interest, I think, just to resolve the issue, just do the direct deposit, go back to that process, and we can move forward.
You need a motion?
I don't think so. I just think that if there was
administrative
Right.
procedure.
Okay.
Okay. Next, update on death benefit form, Roger.
Yes, sir. Our legislation to clarify the use of a beneficiary form for death benefits under this plan is now Act number 1206. And basically it defines things as a death benefit as opposed to a funeral benefit. Language is now death benefit to a surviving spouse of a police officer or the estate of the police officer if he has no surviving spouse, or a beneficiary chosen by the police officer before death. And it does say that the board shall provide a beneficiary form to all active and retired members. So you'll have to develop a simple form to declare a beneficiary if they don't choose to do that. You can send them a form, they never fill it out, and it follows what it says in the bill to the spouse or to the estate, should there be no spouse. So you now have the option and the ability, I shouldn't say option, you now should provide a beneficiary form to everybody.
But if they don't fill that out, then it goes to the spouse.
If they don't fill it out, it goes to the spouse. If there is no spouse, it goes to the estate.
If they fill the form out, said I want it to go to.
Then it goes to their beneficiary as they designate.
Where,
Well, we had a situation, and Debbie, maybe you can clarify for me, but we had, and I don't even know if it was fire or police, but we had somebody who wanted to name the funeral home as their beneficiary because they wanted the payment to go directly to the funeral home, I think to try to avoid taxes, kind of the way you do in a life insurance situation, but this is gonna be a taxable benefit.
If it's a death benefit, typically it's not generally taxable. I know life insurance benefits are never taxable.
No, they're not, but this isn't life insurance.
Well, no, but it's still, I don't know, you'd have to ask the accounting firm as to whether it is or whether it isn't. But that's still an option under beneficiary form. You choose to say it goes to the funeral home, you can do that. It's up to you. For most people, unless they have a substantial estate in excess of a couple of $1 million, then it's going to be taxed anyway. Is that you? In excess of $2 million?
Wait, Sarah, don't we already have a form that we use?
We do have a form,
Yeah, they developed one.
yeah, we do.
Any other questions on that issue?
one question, what's the plans on getting this form out? I think we discussed that for several months. Getting out the beneficiary form.
Well, we didn't get it out because then they were discussing this, so we put that on hold until this.
What's the bill number on that?
Bill number was 1171, the act number is 1206.
Act number 1206.
We want to spend money getting that now, with the possibility of consolidating.
Because this will be effective in 90 days after somebody dies. It says shall.
I don't even know whether it had an emergency clause or not. So
It doesn't.
typically 90 days. If I might, I'll cover 2 or 3 other things just quickly. We did not see any effort to change the allocation of premium taxes, the extra allocation in particular. There was sort of an effort, it never really gained traction to change the allocations. So your plan is, we'll just say protected, you're going to continue to get what you've been getting, you qualify for it clearly, and there'll be no undermining of that. There was an effort by a couple of cities that they thought they should get money too, even though they didn't meet the 10% threshold. And so I think the general feeling of the legislature was if your local community or employer isn't doing their part, you're not going to be rewarded for not doing anything to put additional money in. So that did protect the allocation. There was another bill, which is now Act 500, that was kind of a cleanup bill on the allocations to ensure that you continue to receive what you're receiving. And overall, I mean, I'm very pleased that there was no real negative attempt to redirect the premium taxes in any way. And one last thing, the bill that you had earlier asked that we at least put out there was to provide an additional stipend or benefit to police plans, particularly for this police plan. That was ultimately withdrawn because it would have had a negative impact on your allocations. There was no money to distribute without taking it out of out of what you're getting in larger allocations. So cooler heads prevailed on that one. That one was seen to be something that would be detrimental in the long run, so that was withdrawn. So we came through the session in pretty good shape. The session itself, last night, if you either watched the news or read the paper, was a very long evening for everybody. They've been struggling with trying to figure out what to do about the Medicaid expansion, if you want to call it that. They finally settled on something last night with the Senate approving the appropriation bill by 28-7, so that's finished at this point. There were a number of amendments put on yesterday, and it probably puts the state of Arkansas in a better position long-term to deal with it as opposed to doing nothing, which would have left us exposed to the government at the federal level, making all of our choices for us, which never usually seems to be a good thing. So it has been a difficult session for a lot of people. But as far as our retirement issues, the retirement committee, oddly enough, I think they had the best attendance I've ever seen them have at every meeting. In the past, there's been a lot of people, a lot of members didn't show up. This year they showed up for just about every meeting. So a lot of attention to that. So anyway, any other questions?
I've got one question.
Yes, sir.
Was there an effort or a bill put forth to change the requirements for retired officers' range, the range qualifications? Heard that mentioned in the past.
Actually, no. However, it wasn't needed because we got the law enforcement training standards people to change the standard at their level. So now you can stand close enough to hit the target.
Has minimum standards done that? Yeah.
I think they have. They simply had to approve the new rules, and if they haven't yet, they will. There's no opposition to changing those rules. It still leaves local departments free to set whatever standards they want for their active officers. But as far as retirees, you'll be able to, I think, qualify at 15 yards or something. I don't remember the exact number, but they came through and did what we asked them to do. So if you're retired, you can stand close to the target. Besides that, by the way, a lot of our agencies are now using that same standard. They don't, it's kind of, I think the supposition is that you don't really use that weapon at long range very often. It's usually at very close range, so qualification is now for most agencies at close range.
Oh, 15 yards is close enough.
But the only problem that we have with that is if they set a separate course for retired officers,
Conflicts with the federal.
You don't fall under the guidelines under the federal.
They have decided that for retirees that's acceptable. So.
Federal? The federal people have it?
I don't know about the federal, but it doesn't have a whole lot to do with what the standard is in this state at this point. That was their approach. We couldn't have changed the federal standard anyway.
Okay, thank you, Roger. Sarah?
Just a quick update since we didn't
Well, I
have
assume, I mean, we
didn't have a funding committee meeting, but we have been contacted by Denise over at LAWP with a couple of follow-up questions. I know Gabrielle Ruther's working on the study because they've asked a few questions that we've replied or responded to, so it is underway. Turn to 8A. And first we'll go through our February report. As of the end of February, line 45, the fair market value of your plan assets was $43,953,801. The portion of that managed by Stevens was $42,682,593. The drop balance as of the end of February was $20,140,660. If you'll flip the page and look at your revenue, the revenues for the month, $290,224. Year to date it was $406,669. The expenditures, we had benefit payments of $595,637 year to date. That's just under $1.2 million.
Where are you at?
I'm on line 16 of the February report, second page.
Thank you.
Okay. Then, the drop benefits paid out, line 35, it was $100,266 in the month of February, so year-to-date, $203,778. As you just heard from Stevens, our investment returns have been very, very good in January and February. February's net investment returns $276,880. Year-to-date, it was $1,351,129. So for the month, with very low property tax receipts in the first few months of the year, the there was actually a net loss of $130,846, but net income year-to-date of $352, $349, primarily due to the investment returns. I'll go ahead and move on to the March report. As of the end of March, the fair market value of plan assets is $44,200,439. $43,460,622 was managed by Stevens, with the remainder in your First Security account for benefit payments. The drop balance was $19,977,312. If you turn the page, you'll see, again, property tax receipts are extremely low in the first few months of the year. The sales tax allocation, you see, at $41,667. $125,000 year-to-date with the first quarter. The benefit payments, line 16, $595,627 year-to-date. That's $1,786,901. Drop payments in the month of March, there were only 69,000 drop payouts. Year-to-date, 272,777. So before any investment returns, there was a net loss of $531,801. Year-to-date of just over $1,000,005 net loss, but as Stevens reported, investment returns have been very good. The month net return was $778,439, and year-to-date $2.1 million. So the net income for the month was $246,000, and year-to-date just barely under $600,000 positive. Now on the next page, one thing that I know you're happy to see is that there have been no attorney's fees so far this year in the first quarter. And our non-benefit expense, $2,150. So the grand total, $4,150, and nothing out of the ordinary there. That was
February.
That was February,
March is
and then
behind it.
March is right behind that. The biggest expenditure in March, you'll see the $7,800 for the law fee study. But otherwise, all the normal routine expenses and still no attorney's fees.
I'll make a motion, yes, to approve the two financial reports for February, March.
I second.
We're ready for the vote.
So much going on, we're getting ready to get out of town, so. All right, is there a motion to approve this?
Bears made the motion.
Financial.
Yeah. So there was a
Bears
second.
made the motion,
All
there
right.
was a second.
All those, any further discussion? All those in favor signify by aye.
Aye.
Opposed? Motion carries.
Okay, and now on 8B, we've got one Madge Dawkins removed from the pension roll. Date of death, 3/31/2013, the amount of $1,170.43.
A motion.
I make a motion to remove Ms. Dawkins, date of death 3/31/2013, in the amount of $1,170.43.
I'll second.
So moved and probably second, to remove Ms. Dawkins, for discussion. All those in favor signify by aye.
Aye.
Opposed? Motion carries. Somebody want to mention that Ms. Garrett paid $150, I guess, in March.
Yes, we did.
All right. Discussion website, Mr. Arnold?
Yes, sir. We're fast approaching 20,000 hits. If anybody has anything that they need posted, please forward it to me. I'm constantly searching the internet for pension-related information, so if anybody can help me out, I sure would appreciate it.
keep these on the agenda or just have them come back on the October agenda? Or you plan on just keeping them every month?
I just plan on leaving it every month till we decide. It's not that far off, but that's okay.
Any fund member comments? See any other business?
Mr. Mayor,
Yes, ma'am.
I would like to report that Lee and I attended the fire pension board meeting and talked to them about what you all was doing. They have asked Joey to bring up some figures for them to show where they are, the figures that you all had several months ago. They are in the process now of wanting $100 a month raise, and they wasn't for sure if they was gonna be ready at the time y'all are to go into lobby or not. I expressed to them that I thought it would be good for the city if both went in at the same time. So they're considering that, but they're waiting on some figures from Jody.
And Bruce, I have the board nominations, Ferris, Lee, and Rusty's seats are up for election. The nominations were to be turned in by the 15th of April, and we did not receive any. I mean, they've all said they were gonna rerun, but there's nobody opposing them, so. So, I guess they have their seats.
So I think we still have to do something official.
Do we still have to send out the ballots and all of that?
I don't think we have to do that, but I think we have to, don't we just have to approve the slate, I guess?
I'll make that motion that we approve the slate.
I'll say.
Moved in proper second,
Which
all
slate?
those, all those in favor signify by aye.
Aye.
Opposed? Motion carries. Welcome back. Any other business?
Yes, Mr. Chairman, I want to request of our secretary that he note in the minutes that I was late because I got held up in screening downstairs and shook down. We went through this situation about a year ago.
Can I just say something?
You betcha.
I have given, I had them pull the policy, and the security guards made a mistake, and they will receive the revised policy that I put in place, and that shouldn't happen again. Sorry.
Thank you, Mr. Martin, because I've got a gun I secured out there in a truck that I'm really worried about.
I didn't have a gun, but I had a little knife.
But
Kevin had enough for all of us.
I mean, yeah, I don't know if you know the policy, James, but if you're, a retired certified officer, you can bring in a weapon.
Yeah, I knew, that's why I tried to tell her, but she said no. She made me take it back.
Did you show her your, okay, we'll get we got new ones, and one of the things, and this might have been what happened too, yesterday I kind of put in I kind of gave a directive. I thought they had gotten pretty lax, not with you all, but just things that I had seen with them, with headphones on, and I just said, considering what happened in Boston and all, we just got to be more vigilant. And
yes, sir.
so anyway, that they'll get that policy, and I apologize, I didn't realize that was going on.
Mr. Chairman, I appreciate that, and that will certainly straighten it up, but I do want to tell my story. I just can't help myself. I come in, it's raining, and I'm right on time, because I had to go back to the house for something. And I come in and I show my ID, and the young man says, I don't work anymore. I said, well, I'm retired. He said, well, you got everything right there in that basket. And I said, okay. So I take everything out and put it in my basket, and there's a knife, less than 1 inch long. And he said, you've got to take that back out of your truck. And I said, what? He said, yes, sir, you've got to take that back out of the truck. It can't come in City Hall. So, I wasn't about an old man like me to run the risk of walking back out in the rain and my truck slipping and falling. So I just took my knife over the door and chunked it. I said, it's not in City Hall anymore. Now, can I go through here? No, I don't like your attitude. So they call Miss Susan back. And she gives me a good talking to. Of course now, Bruce, you know how I am in these meetings and everything. I didn't, you know, I might have raised my voice a little bit, okay? Because I was a little upset at that time. Well, that still wasn't enough, okay? They get the head of security down there while they were calling you up here and Susan or whoever they were trying to reach. Well, the head of security comes down there. He points to a sign on that side of the door there, and he said, that says no firearms in this building. I said, but you allow police. Yeah, but you're retired. I said, well, you've been allowing retired officers. No, we never have. So, you know, security really don't know the policy. And apparently never has, since I had security done. But anyway, about this time I'm sitting over there like a good little schoolboy after I've been chewed out twice and Director Adcock. Thank God Director Adcock comes to the door and pulls me out of the fire. And I'm sitting over there with my mouth shut on the bench. Took all I could do to do that. Yep, took all I could do to do that. But anyway, I done it. That just goes to show you how much control, self-control I have over myself.
Thank you, Harris.
Back during the rental inspection, he would have been outside, jumped up and down, saying words that wasn't.
Usually it's her sending me outside. But I appreciate you taking care.
Well, I did ask which one
understand.
of y'all sent him outside.
I just felt compelled to tell my little story. And I hope one of those security guards didn't get my little knife because I hit it over behind the thing. It paid 50 cents.
Where'd you put it at? I'm leaving.
I didn't tell him.
All right, anything else?
I move that we adjourn.
I'll second.
All those in favor signify by aye.
Under 45 minutes.
Wow.
45 minutes. That's because Lee came to the fire meeting and figured out how to do
How they
it.
do it? 45 minutes.
45